please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back to Bazaar Morning Call. For now, the market is still looking pretty, up almost 0.7%. Let's talk about some sectors now. In a booster shot for commercial vehicles, the Finance Ministry has approved the vehicle scrapping policy, which will allow companies to scrap commercial vehicles older than 15 years. The document, though, has not gone to the GST Council just yet. But once it goes to the GST Council, it will fix the concessions by the states and the centre. So in a bit, we'll get chatting with some of these commercial vehicle makers that could be big beneficiaries. In the meantime, let's also tell you what's moving in the market this morning. It's all about the metal story. So now you have names like JSPL that are advancing to almost a 4% up move. But let's get back to Ashok Leyland. Gopal Mahadevan, the CFO of the company, is with us. Mr. Mahadevan, good morning and thank you for joining us on CNBC TV 18. First, I wanted your views, sir, on the scrappage policy. Once it does come through, what kind of improvement do you see in demand? And so far, we don't know if it's voluntary or it'll be mandatory. Even if it is voluntary, do you see a lot of replaced vehicles, or rather a lot of used vehicles moving out of the market?
I believe so. I think it's a very, very positive development for the industry, something that the industry has been waiting for. At the moment, newspaper reports cite that it is a voluntary scheme. The Ministry of Finance has approved it, but I think it's going to the GST Council for the next round of approval. The reports also state that, the government is mulling about giving about 5 lakhs of rupees for, vehicles which are over 15-year-old. We'll have to wait and see for the announcement. But having said that, what I can tell you is that if this were to happen, some of the larger fleet operators who have older vehicles may want to actually switch over very quickly to the newer vehicles. So this is a very, very positive development. And I think in terms of the demand, it's a little difficult to forecast, but I would say that 2 to 3 years of industry volume is what you would see in the initial year or couple of years as a replacement volume if things go well.
How many vehicles, Mr. Mahadevan, you think? Yesterday we had the heavy industries minister, and I think, what did he say, 20 million vehicles?
28,
yeah. 28 million vehicles. I mean, that looks like a large number. In an election year, will that many vehicles, that many fleet operators be put into trouble? What's a realistic number you're working with?
Well, all I can tell you is that it's a very difficult guess at the moment because the 28 or 20 million vehicles, the statistic that's going, we don't know whether it's purely commercial vehicle industry or does it include all other types of vehicles also. So we'll have to wait out for a further amount of details on that. But our guesstimate is that if this were to happen, even if you were to add another 2 years to 3 years of total industry volume coming over and above the current demand, it's a very, very healthy number. So you can't obviously service, millions of vehicles over a year. And I don't think that's going to happen. But even otherwise, if you see the total industry volume jump up very significantly because of the voluntary scheme, even that would be a very, very big positive for the industry.
I don't know the numbers.
Wait and watch, but definitely a positive development.
Mr. Mahadevan, we don't know the numbers. Can you give us a perspective as to what is the annual volume of the industry and what is, according to you, maybe the number of vehicles produced before 2005, which appears to be the big date going around?
I don't have that level of statistics here, but I can tell you the easier one, which is the total industry volume would be anywhere between 320,000 to 350,000. So if you were to look at 2 to 3 years demand, that number translates to anywhere between about 550 to about 800,000 vehicles. It could also go to 1 million vehicles, but we'll have to wait and watch.
Okay. Mr. Mahadevan, good morning. Let's just get that chart back on the sales of the last 3 months for Ashok Leyland. It's been stunning. So the obvious question is the CV cycle now back at its, back to its best, or is approaching its peak once again? Your thoughts on whether you can repeat, these kind of numbers for next, say, 8 to 9 months?
Well, the CV industry definitely has had a good pullback, in November, December. If you look at it, till September, the total industry volume was lower than last year. But as I'm talking to you today, the total industry volume is higher by about 14% in numbers over last year. If you were to translate that into tonnage or number of axles, that number would be something above 20%. So that augurs very well for the industry. We've seen the industry actually move from the middle range vehicles to higher tonnages, you know, the 37 tonner, the 41 tonner, the 49 tonner. All of this has happened owing to 2 or 3 reasons. One is, you know, there is definitely an infra push that is happening. You know, the investments in road, mining is opening up. You know, other infrastructure spends of the government is also kind of triggering the demand. The second one has been the positive, I would say, you know, regulation. So you've had rated load applications coming in some of the northern and central states. That has again seen a demand for vehicles. The third one is, I think, if we see that FY you know, 18-19 is going to be a good year for the country, I see it to be very, very positive for the commercial vehicle industry also. So to answer your question, I am expecting a growth in you know, the CV industry next year as well.
So even without scrappage, 20%? No, that's what you've done. No, that's what you've done year to date.
It's a little difficult to estimate that kind of number. That's what we've done year to date. Let's hope that number repeats itself next year. But I would want to be a little more, you know, careful and possibly look at under promising and over delivering even on the TIV forecast bit. So I would say a 10% growth to 15% growth seems likely.
Okay, 10 to 15% growth seems likely. You know, the other big trend that we've seen this month is that light commercial vehicles have outperformed medium and heavy commercial vehicles, not just for you, but for other players like Tata Motors as well. Is that because of we're seeing a lot more demand for the e-commerce business in this last mile connectivity? And is that a trend that will sustain?
I believe so. You know, the immediate future looks very positive for the light commercial vehicle industry, and we are very positive about our LCV business also, because you know, we've seen quite a bit of growth in our volumes, and we are still to launch about 6 to 7 vehicles over the next 12 months. So as we keep filling the slots in our LCV portfolio, we would actually see Ashok Leyland volumes also going ratably higher than industry. So extremely positive about our LCV business.
Okay, just one final question then. You spoke about the substantial shift towards high tonnage trucks. That was because of the clampdown that we saw on overloaded trucks, right? And that's been going on for the last 5-6 months or so or more. Do you think it's now behind us, the higher sales momentum because of the clampdown on overloading, or are we expected to see more?
You see, there are 2 reasons. One is the overloading bit that you talked about. Now, that has not happened on a pan-India basis. We've seen it happen in some of the states like UP and Rajasthan and certain parts of MP also. I'm sure that that would happen in other states. So that would be a driver for you know, additional demand for CVs. As far as the higher tonnage vehicles are concerned, another reason for you know, the medium and large fleet operators to go for that is the economies of scale. They're seeing more, you know, more loads, and they find that it makes sense actually to go in for a higher tonnage vehicle like a 37 tonner or a 41 tonner, because the economies of scale start kicking in, and the total cost of ownership and the profitability is much better in a larger tonnage vehicle than in a smaller tonnage vehicle like a 20 or a, you know, 27 tonner. So there are the confluence of 2 of these reasons that's actually driving up the volume. To answer your question as to whether we see this happening over the next 12 months, well, it's a calculated guess. Like I mentioned to you, this 10 to 15% growth that, you know, I have kind of shared with you, there is a lot of assumptions underlying it, of course. The basic assumption is that the GDP is going to grow, the economy is going to grow, you know. So if that were to happen, we would see demand for commercial vehicles going up. It's a, you know, it's a logical conclusion, because I keep telling that commercial vehicle industry is nothing more than just transporting GDP. So if the GDP were to grow, CV industry definitely has to grow.
Okay, and we hope you do. Thank you very much, Mr. Mahadevan, for joining us and giving us a perspective on both the growth of the industry and the impact of the scrappage policy, if and when it comes. Okay, from commercial vehicles to raw materials, again, materials industry. NMDC has cut domestic iron ore fines prices for this month by 3% and 4% for lumps prices. This is the first price cut after cumulative price increases of about 35% from November to January. T.R.K. Rao, Director Commercial, NMDC, joins us now. Good morning, Mr. Rao. Thank you very much for your patience. First up, is this just a minor correction and the uptrend will continue? Because we see an uptrend in steel prices.
Yeah, the correction was necessary primarily because we wanted to improve our volumes. We had a very good volume growth till Q2, and in Q3, because of a major accident, there has been a decline in volumes. So in Q4, we wanted to make up the volumes and better our last year sales. It was primarily meant to increase the volumes. We had to undertake the slight correction.
How much do you expect volume will increase because of this 3% fall in prices?
No, actually last Q4, we did around 9.8 million. Now if we cross about 10.5 million in this quarter, and we should be able to better our last year's sales.
Okay. How is the demand in general on the ground, Mr. Rao?
The demand is quite good. As my previous speaker said, it's all linked to the growing steel consumption within the country, and also, as you know, the exports of steel also have picked up. The demand is really very good.
Okay. Therefore, what kind of a percentage can you expect in FY19 as well? Do you see the demand continuing?
The demand is definitely likely to continue, and we have been doing around 30 million ton. Now we reached a figure of 36 million ton, and next year our sales are bound to be around 38-39 million tons.
You know, there are two mines of yours in Odisha, the SL mine and Serajuddin mines. They have restarted, right? Do you expect that to, you know, give you more yield? How much can your volume increase from these mines?
No, those mines belong to the private miners in Orissa. Okay. NMDC has no presence in Orissa. Okay. In fact, we compete with the Orissa miners.
Okay. So if that happens, then will there be a further pressure on prices in that case?
No, normally we have a different clusters. Our competition varies from cluster to cluster. Now that will primarily affect the inland customers. So that's why we make these corrections on month-to-month basis.
Okay, you said 38.
And in fact, because of the penalties.
Yeah. No, go ahead, sir. Go ahead.
Yeah, I said that. That's it. No, because of the penalties and the 2020 coming in, everybody want to ramp up the production and also hold the prices. And this is what the volume and hold the price. This is what the industry is doing for the last couple of months.
Okay. You mentioned 38 to 39 million tons for FY19. What will this do to your average realizations? You have been sitting at around 2,500 rupees a ton currently. Do you think it could go up further?
Now, currently, we are operating at a healthy EBITDA percentage of 54% to 57% we have reached this year. And we are likely to maintain that 57 to 59% of our EBITDA.
Okay.
Given the good outlook for the market in the Q4 as well as in the coming years.
What is the expansion you are expecting in Karnataka? What is the progress?
Karnataka, actually, we have a cap of 12 million tons in terms of production.
Okay.
And we last year also we achieved. This year also we are achieving the 12 million ton production. And sales, last year we did 12.5 million, and this year we will end up with 13 million tons. Now we are requested the government and the Supreme Court to enhance the cap to 14 million. If that comes, state we have a extra growth of 2 million tons in Karnataka itself.
And your steel plant commissioning stands in September 2018?
Yeah.
Okay. All right, Mr. Rao, thanks a lot for your time today. That's NMDC. The stock's doing well today in line with the global cues. The market is slightly off the high point. The Bank Nifty is once again seeing slight bit of pressure at high point. So that's interesting. But a couple of stocks are interesting. Adani Group of stocks and Adani Power in particular, which has huge amount of debt. And this morning there was this tweet from Subramaniam Swamy on that, and that's really interesting. Let's just see this tweet. That's, of course, Subramaniam Swamy's tweet, and he's talking about Gautam Adani and that he should be made accountable or a PIL is inevitable. So let's see how much debt is the Adani Group sitting on. Anisha is here with all the details. Anisha?
Well, yes, Anuj, the latest tweet by Mr. Swamy might put the investors of Adani Group under a bit of nervousness because remember, though the overall group debt equity is 1:1 and looks comfortable, there are parts of businesses which are not doing well. Case in point being Adani Power. Remember, the debt as of March 17 was a huge number of 46,000 odd crores. It is expected to be close to 50,000 crores. Still, given there has been no resolution for the Mundra Power Plant, remember Mundra Power Plant remains the Achilles heels for the company. The project debt of Mundra Power Plant itself is around 16,000 odd crores, and the resolution whether regards to transfer of the business to JUVNL etc. has not really worked out for the company's favor as of now. The debt equity is as high as 20 times, and there were brokerages like CLSA suggesting that half of company's debt might become unsustainable if Mundra Power Plant situation is not resolved. Also, the company's going concern might be under question, was what some of the brokerages had said. Now, I was going through the balance sheet to figure out how much debt, how much exposure do the Indian banks actually have to the company. Now, they do not, they have not mentioned any bankers, but they do say that the rupee term loan to banks is around 24,000, 25,000 odd crores in terms of secured loans. There's additional short-term trade credit for around 3,900 odd crores. To the financial institutions, the rupee term loans is around 3,000 to 4,000 odd crores. So the rupee exposure remains high because remember, the foreign debt for the company is just around 15-20%. The rest is actually rupee dominated. So maybe the Indian banks are what will come under pressure if the investigation goes through and there's any amount of skeletons that come out regards to Adani Group. Back to you.
Okay, Anisha, thanks a lot for that. So that's Adani Power and, of course, Adani Group stocks. But let's shift focus now to the cement space. Nigel is with us to tell us why he's watching ACC and Ambuja this morning. Nigel?
Well, a couple of brokerage notes have come in overnight. In fact, CLSA's notes is quite interesting. They're saying that LafargeHolcim, they had levied around a 1% technical know-how charge from both these two companies in 2013. Now, that lapsed on the 31st of December 2017. There's no communication in terms of renewing this contract, or in fact, even hiking any of these rates. So if there is no, there is no renewal in terms of, of this 1%, then it will be good news because they get saved on that 1%. If in fact there is a renewal and there is a hike as well, that will be viewed as a tad bit negative. They have also given a sensitivity analysis. A 1% change in this technical know-how charge, that can affect their EPS estimates by nearly around 5 to around 8%. So if it doesn't come about, it will clearly be a positive. The other note I'm looking at is Deutsche Bank. They are viewing LafargeHolcim's strategy 2022 as a positive. Why is that? Because now the focus more is on growing the market share against their erstwhile, their earlier strategy wasn't focusing on operating profit. So that's good news. And in fact, now they're empowering the local management with functioning of those plants. So for India, why is it good news? Because in the last few years, ACC Ambuja as a group, they have lost market share to the tune of around 700 basis points. So giving them more amount of authority can help them in scaling up, the market share, which will be viewed positively. Deutsche Bank likes ACC more than Ambuja Cements on valuations parameters. Back to you.
Okay, Nigel, thanks a lot for that. That's, of course, ACC and Ambuja. Market, by the way, is quite interesting because there's just a bit of nick from the high point. Still trading with green, and of course the mid-cap index is the one which is the biggest outperformer for now, up about 0.8%. The stock of the moment now is Aurobindo Pharma. Just see the intraday chart of that stock. And from the lows of yesterday, the stock has now seen a big rally. This is perhaps a case of the market pricing in the worst, and then after that moving on, and a big move right now on that stock. Ashwini Gujral, Mitesh Thakkar back with us. Rajat Bose is also here. Ashwini, thoughts here? The market is in the green, but not building on, of course. Just been 45 minutes. How to approach the rest of the day, and what will be the stock calls now?
Well, for the moment, we are holding on to 10,400. So maybe that is a fairly decent stop for long positions. But given that we are so close to 10,300, I'll be very surprised if we just turn around and break through and go lower. I think given the way we traded yesterday and tested and retested, I think dips are likely to get bought. Now, obviously, you do everything with stops. I think on financials, on metals, there could be another rally which takes us higher. but 10,400 on the Nifty futures thereabouts should act as a decent stop. As far as individual stocks are concerned, IndusInd Bank is a buy with a stop of 1710, target of 1765. Vedanta is a buy with a stop of 312, target of 328. And JSPL is a buy with a stop of 244, target of 258.
What's the target and the stop on the Nifty Bank, you say?
See, on the Nifty Bank futures, the stop should be, 24,970, 980.
Okay.
And a target could be closer to 25, 150, 200. Because after so many days of decline, 1 or 2 day pullback, which gets the longs back into the picture is needed if we need to go through 25 or rather 24,800, because otherwise there isn't volume at those levels for the market to go lower.
Okay, Mitesh Thakkar and Rajat Bose are also with us. Mitesh, what would you do now in individual stocks? Is it all about metals that you're going to trade today, or are you looking at something else as well?
In fact, to be honest, on the metal also, I'm not quite positive. I think, yes, there's a spike and some intraday charts are good, but my sense is that I don't think this entire rally might be, showing more strength. I think 10,450 on the Nifty is pretty critical. 25,200 on the Bank Nifty is pretty critical. We have had gap downs around both these levels. So I think we'll see a lot of supply emerge at these areas. So I'm not sure that I would want to be trading much on the long side. So in fact, I have one sell call on the metal side, and that's Hindalco, which is very close to the gap area. So sell with a stop at 240.20, look for targets of 220. And PC Jewelers is a buy, keep a stop at 341, look for targets of 362. Typically it's reversing from very oversold levels, so you might get a mild pullback.
So I was going to ask you, PC Jewelers, after a deep decline, it's been holding out around the current levels. So PC Jewelers, buy from Mitesh. Rajat Bose has also joined us. Good morning, Rajat. What would you be trading today?
Good morning. I'm trading two stocks which have posted a new 52-week high today. First one is FSL, that is First Source Solutions. I would put a stop loss at 52.50 and my targets are 57.50 and 59. And Godrej Agrovet, yesterday it had a huge run, but still I expect the momentum to continue, but I have put a very small stop loss, because if the trade were to get stopped out, then one should not lose much money. 677 is my stop loss. 686 and 693 are the two targets that I have.
Okay. Ashwini, thoughts on the moves in Aurobindo Pharma and Sun Pharma? I mean, completely different right now.
I don't think, pharma sector really excites me. One day it's good news, one day it's bad news. You want to trade things where, the weather is fairly clear and strong. Oro Pharma is bouncing back because it's reached almost the 510, 550, which was the lows last time around. But I don't think pharma is a great space other than the odd biocon.
Okay, well, a couple of more stocks hitting new highs today actually. Godrej Agrovet has hit another new high today. So big move coming in. Okay, there's a BJP parliamentary meet that will begin in just a while from now, and that's some live footage that you're getting. Prime Minister Narendra Modi going to chair that meeting. But for now, as we were saying, a couple of these stocks, Godrej Agrovet, Bharat Bijli is another stock that has been in a huge bull market of its own. The stock is up 35% already this year and is now approaching the 1,700 rupee mark. In fact, I think it's above that, yeah, 1,730 now on Bharat Bijli, a new high there. But thanks, guys, for joining us and giving us your technical view